Hi, everyone. Welcome to the 120th episode of the Timing Research Show for January 9th, 2017. My name is David Kosmeter. I'm the creator of Timing Research. And today we will be discussing the 172nd weekly report. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any past report there. I have Dave Landry back to host today, so I'm going to go ahead and turn it over to him.
Okay, thank you, David Kosmeter. Thank you to Timing Research also for having me back once again. We got a full lineup today, looks like. Lance, let's go over to you. Lance Ippolito over at AlphaShark.com. I know some of those scoundrels over there. I got into trouble with some of them over in Vegas, but I guess what happens in Vegas stays. I actually shot some machine guns. It was a lot of fun. Mostly Keen. He's a lot of fun. Anyway, tell us a little bit, for those of us who don't know you guys over there, tell us a little bit about AlphaSharkTrading.com, and also, Lance, tell us a little bit about your trading.
So by trade, I'm a CTA. I ran a fund here in Tampa, Florida for a few years. I've been with AlphaShark a little bit over a year now, I want to say. And at AlphaShark, our kind of bread and butter is unusual option activity. So we have a live scanner going throughout the day, picking up probably thousands of signals a day, and we kind of filter that into anywhere from, some days at 0 to 5 to 10 actionable ideas a day through institutional order flow. So that is the option side of AlphaShark. Recently, we opened up a live futures trading room, and we actually have an open house going on right now to where myself and one of the other moderators are trading live the S&P, gold, bonds, the NASDAQ futures, crude oil, from the open all the way till about noon. We have the futures room going too.
Cool. Well, we're waiting on, looks like we're waiting on one or two guys here. So while we're doing that, let's go over to you, Neil. Neil's a friend of the show. He's been here a billion times. And Lance, you're becoming a friend of the show too. But anyway, Neil Batho from TraderReview.com. Tell us a little bit about yourself for those of us who don't know you, and tell us a little bit about TraderReview.com.
All right, thanks, Dave. Used to be a broker at a big firm, and Dave knows my stories, heard it many times. Basically, what they teach you at a big firm is you are an asset gatherer. It is your job to gather assets from other accounts and put them into your account. And then that's basically it. And you leave it there and leave it up to the big professional money managers. And to me, there wasn't enough strategy to that. And so I started my own company. I did some business consulting for a couple of years. Started this, back when there weren't many people doing it. And back when I was a broker, though, I did learn point and figure charting, which is what I still use today. I think it's a fantastic system. It's an incredible analysis tool, and I've been using that basically. There wasn't a single crash since 2003 that I did in time before it happened. So saved my clients money. And recently, the last couple of years, I've gotten into Ichimoku Cloud, which I'll use to fine-tune the analysis with point and figure, which is my main system, and send out basically swing picks, which we can sometimes hold for months. We've held up to a year sometimes, like a commodity ETF back in the day. But that's what I do, and I focus on the entry point, because I think if you focus on the entry point perfectly enough, you can have a tighter stop than usual, therefore bigger position size, therefore make more money. So that's what I do for my clients.
Gotcha. On the broker side, I was at a cocktail party once, and I was telling a story about, because somebody was asking me what I do, and it's hard to explain to people sometimes. But I had a broker once contact me. He says, "Look, I've been a broker for 10 years, so it means I don't know anything." And he was referring to charts. So I was trying to explain that story, and one of the ladies there was a broker, and her husband was a broker, and I got into a lot of trouble. So I think sometimes brokers there's good brokers out there who use technical analysis, and there's asset gatherers. And I think the asset gatherers confuse themselves with being good chartists. Anyway.
I got to add a point, though, Dave, for that. With the brokers, the one thing they'll almost always do is they'll stop you from selling at the absolute bottom. If you're crying, you're just crying, "Please let me out. The Dow's down 95%. You'll be like, "You know what, man? Just hang on."
Oh, goodness.
They will save you at least for that.
Gotcha. Hey, David, if you could jump in just for a second. Who are we missing here?
John Thomas is supposed to be on as well.
Okay. All right. We'll go over to you, Barry, in the meantime. We got Barry on, Barry Rosen from FortuneCast.com. He's also FortuneCast.com. Sorry about that. He's also a friend of the show. So, Barry, tell us a little bit about your trading and a little bit about FortuneCast.com.
Okay, FortuneCast was actually founded about 30 years ago. I somehow kind of made it through all these years. We specialize in Elliott wave and Gann and combine that with proprietary cyclical timing. So I like to, Elliott wave for me is kind of a map, and most Elliotticians run into problems because they don't know if it's the end of a third wave or it's the end of a C wave or something like that. And we kind of can look at we chart time. I do lots of work on timing, and so I have calendars where I look at cycles, and if I see that the cycles are still strong for 2 or 3 weeks, I'm not getting caught up in missing the rest of a move. We've been we cover actually about 20 markets. We have an ETF timer also for people who like to trade things like SSO and SDS and GLD and things like that. We also even work with farmers. We cover grains and livestock too.
Oh, wow.
And we've been working with those people for many years. So we've
cool.
Yeah.
Good. Well, just a quick question. I didn't mean to interrupt. Do you have something that some sort of indicator to tell you that you're still in a wave, or is it a little bit more complex than that?
It's a little bit more complex than that. It's kind of basically the patterns keep me out of trouble in terms of taking profits and moving stops up. But my indicators are more cyclical. So
okay.
if I see that the market's up 2 or 3 more days, then I'm not freaking out just because it hit a key number.
Okay. All right, gotcha. Okay, Lance, let's go back to you, and let me make sure I read the question correctly. What direction do you think the S&P index will move this week? And that's basically from today's until Friday's close, up or down. Welcome, John. We'll come right back to you in a minute. Hey, John. Okay. I'm glad you're here. We need to talk about that election when you get a chance too. But before we do that, hey, Lance, what direction do you think the market is headed? And then we'll flesh that answer out on the next couple of questions.
I actually am not too confident this week. I know we have bank earnings towards the end of the week. JP Morgan healthcare conference going on this week. I'm actually leaning lower this week.
Okay.
I see some downside actually. I think everyone's kind of thinking all the banks are going to do well and everything. But I was speaking with an individual this morning and thinking, what if banks perform okay, or dare I say poorly? I think that will really weigh down on the Dow, the S&P. So actually leaning a little bit, maybe about 55% that we move lower this week.
All right.
For a change.
Good answer, and we'll let you flesh that out a little bit more in the next question too. John, John walked off. Oh well.
No, I'm here.
I'm
just trying to get some light. We had the storm of the century over the weekend, so
you're in Switzerland.
A lot of stuff isn't working right now.
Are you in Switzerland?
No, I'm in California right now. We just had 12 inches of rain in 3 days.
Are you a U.S. citizen or are you European?
Born in Los Angeles.
Oh, okay. Didn't you spend some time over there? Weren't you? Did you come to us last time from across the pond?
I travel all over the world, so I can be in England, Switzerland, Japan,
gotcha.
China. Although I'm not planning too many more visits to Washington D.C.
Yeah, you were in Switzerland last time, and I don't know. I felt like it was going to be a landslide, but anyway, we better stay away from that for now.
They couldn't get enough buses for the illegal immigrants.
John, tell us a little bit about John Thomas of MadHedgeFundTrader.com. Tell us a little bit about your trading, and tell us a little bit about MadHedgeFund.com. And then when you're done with that, go ahead and answer questions 1 or 2, which direction of S&P by Friday's close, and then rate your confidence to that answer by estimated you have probably, well, I estimated the probability you have correctly predicted this week's move.
MadHedgeFundTrader.com is a long-short macro strategy. We send out about 250 trade alerts a year to customers. We also have a daily research service that sends out 3 to 4 individual research pieces every day. Last year, we booked a 28% profit for customers. The long-term return is an average annualized 36% right now. As for the week, let's see. Can you hear me?
Yeah. Well, we heard that, and
Okay, looks like he disappeared. So
okay. He'll come back and say, and that concludes the secret to trading. All right, we'll come back to John once again. All right, where are we? Let's go back to let's go to you, Neil. Up or down, and then give me the percentage.
I'm going to go with down, probably about 60%. But there's really, when something's topping out like this, I don't see a big move down, because normally tops take a long time. They take a few weeks, and you get the breakdown followed by the rally to resistance, see if that's going to hold. We don't really have that now. So now is more sort of like, I'm seeing very, very small mini breakdowns. We didn't hit 20,000 on the Dow. It's sort of sideways to down. I'm going to go more on the downside, but I don't.
It's one thing that's I said we shouldn't talk too much this week, and you got me thinking. That's one thing that I found interesting through joining the American Association of Professional Technical Analysts. One guy was up there talking. It was probably Tom McClellan or Greg Morris, one of those guys, and they were talking about how tops are a process. And I never thought of it like that. It bottoms are more an event. It always seems like just the opposite, because when you get that so-called crash, but usually that takes a while to slowly unfold. And I just thought that was kind of a fascinating thing. And I find it interesting you're talking about that. And I guess the point and figure helps you to slowly see that beginning to happen.
Yeah, I'll use the bullish percent sort of for the main trend. And that's still in X's. It's still positive, but it's pretty high. But I'd never go full-blown mega short unless it's turned into O's. And I'll get a chance to show that later.
Okay, cool. That'd be awesome. John, we lost you for a minute, but looks like you're back here. We're looking for what's your take on the direction of the S&P 500 this week, and then rate your confidence to that question by estimating the probability you have predicted this week's market move.
Yeah,
correctly.
I see sideways to up. Obviously, we're in the process of making several runs to break through 20,000 on the Dow. These even numbers always have a ton of resistance, because it's an easy number for hedge funds to short against or long players to take profits against. The fact that we've essentially moved sideways for a month actually is very bullish. I think we're setting up for a pretty decent upside breakout. So I doubt we'll get more than 2% correction this week. And fortunately, this week, the presidential inauguration corresponds with the options expiration. So we have a massive options expiring all on Friday, all are in the money. So we're expecting to book a pretty big month.
Oh, fantastic. All right, Barry, same that question goes to you, up or down, and then percent that probability you correctly predicted it.
Yeah, I'm actually have a bias towards the upside today. Maybe about 65%. I've been looking for 2295 to 2300 on the S&P for a while, and tomorrow to me is the most vulnerable day. And if the market stays above 2257 on the S&P futures, then I'm not going to worry about a lower target of 2240. But for the most part, I'm thinking the market will edge up. I agree with our other guests that people don't like these even numbers on the Dow. I try not to pay too much attention to the Dow, because it's just 30 stocks, and I really don't. Actually, we stopped kind of following it, although we have people that would like us to follow it more. But it's just it seems to be kind of an aberrant, because it's just it's not representative of the broader stock market enough. So I don't want to get too caught up on Dow 20,000, but I would like to. I do have a bias toward the upside this week.
Yeah, and I agree with you on that. And just a couple of points real quick. For the next round, we're going to ask about developing events in the market. So if you want to pull up, you guys who would like to share charts, get that ready to go, or start thinking about that, and then we'll come to you in a few minutes. I'm going to go with up, and I'm going to give it about 60% as a trend follower. That's what I do. I just follow the trend, and I was once called the trend following moron. So I'm not going to argue and try to outsmart a market that is at or near new highs. I do have some concerns. There's always something to worry about in this business. I believe it or not, it's kind of hard for me to even believe. I actually forgot to introduce myself. I'm Dave Landry of DaveLandry.com. Easy for me to say. Like Lance, I was a CTA for about 14 years. Traded stocks during that same time as part of a hedge fund. The hedge fund worked mostly with bond future options. So that was my institutional side. On the retail side, I've been at this for a long time too. I was part of one of the first websites out there providing commentary. On my website, I have tons and tons of contents, and I do also have a content, and I also have a daily trading service where I give out actual signals. And John, I wanted to ask you: Are you just a well, I could ask you offline. I was going to ask you about how do you handle your signals, but we'll talk about that offline. I don't know if it's going to fit into the show, so I'll contact you offline on that. Anyway, let's go back to Lance. And Lance, what developing events? Let me read the question, make sure I get it right. For your answer to number one, what specific reasons do you think the S&P might be headed in the direction that you have chosen, which is down, I believe?
Yeah, so I'm leaning slightly to the downside, mostly because of the financial earnings. If we look at technically, we are trending sideways. Usually after we do not hit like Dow 20,000, for example. Usually when we try multiple times, when we finally break through the upside, I always say like we tear down a door, like a SWAT team breaking into a house. We'll tear it down and just move higher. But I do think the bank earnings could be already priced in, from the election, repelling Dodd-Frank, however you want to look at it. And I think if bank earnings aren't really just phenomenal, these, your Goldman Sachs, your Wells Fargo, JP Morgan, these stocks could decline, and therefore we could see some weakness in the market.
Yeah, the quarterly earnings are priced in, but the deregulation is not, and the deregulation could lead to a doubling of bank stocks from these levels.
Wow. Does it? But John, the deregulation, is that just a perception that makes it take off, or would the reality take a long time?
Big deregulation, and it'll start on day one, because the way the federal government works is you just tell people to stop doing their job on January 20th, and you get instant deregulation. And the fact that banks know that the SEC isn't going to come calling anymore, I mean, that is immediate deregulation, and that's not just in the financials, but also energy and several other industries. So, the president has the power to ignore, and that is a very powerful weapon in Washington.
Okay.
So let the legislation catch up, in 6 or 12 months, but the mere expectation of deregulation is worth a lot, and that's why you've had this outrageous move in the market in the last.
So you're saying it's easy to tell someone in the government to stop working?
Very easy. In fact, that is the status quo. To get people to work, you have to actually, do quite a bit. So, these regulatory agencies, an awful lot is done on discretion.
Gotcha. I was a government contractor fresh out of school, so I've seen a lot, and I'm probably guilty as charged too, so I don't want to pick on anyone.
I will say too, I am worried too about some of the banks too exposed to more of the Latin America countries like Citigroup, stuff like that. I actually worked for Citigroup Global Markets for about a year prior to joining a commodities fund. So, to say regulation in the banks is tight right now, yeah, it's I would say probably half the jobs created in the financial sector was all because of regulatory issues. But
yeah, interesting.
Also, too, we do have Fed speakers this week. To the prior question, we do have some Fed speakers, which could always throw wild cards in the markets.
Yeah, I got you. Neil, same question goes over to you. If you want to share some charts, we usually enjoy seeing your charts. If you want to throw something up and talk about why you picked the direction, I believe down is what you chose.
Sure. Let me just get on here in the sharing. Can you guys see this chart?
Yeah.
All right. So this here, SPX 850R, this is the percent of stocks that are above their 50-day moving average in the S&P 500. Right before the election, below 30%. And you can sort of trend this, but 81% is really pretty high. So if you imagine the whole S&P 500, 81% of those stocks are above their 50-day moving average.
Could you show us like a weekly or a monthly on that, just real quick?
No, the weekly doesn't really look so good for some reason. It looks a bit funny. You can't really trade it. I'll bring it up. See.
Oh, okay.
It doesn't really
Gotcha.
look very good. You got to do the but the point and figure one looks pretty good if you can trade point and figure. You can also do the 200-day moving average, but for short term, I'll use the 50. And 81's high. Could it go a bit higher? Maybe, but if you're thinking about taking some profits, you can certainly do here when it's this high.
Gotcha. That's interesting. That's cool. Like that. Anything else you want to say before we move on, or?
That's it for now. Yeah.
Cool. All right, Barry, let's go over to you. If you want to share a chart, fine. If not, that's okay too. For your answer to question number one, what specific reasons you think the S&P is headed the direction you choose?
Well, again, I trade a lot off of pattern and combining that with cycles. And my cycles are pretty much pointing up this week with, maybe one exception tomorrow being kind of a mixed day. To me, the pattern just never completed up to, 2295 to 2300. And the larger pattern was projecting 2330. And my larger cycles are kind of pointing higher into early February. So I'm actually, I'm fairly friendly. I up until last week or so, I was looking for, a larger correction. But since we kind of went into some new high territory, I just, I never want to kind of get too bearish. And I guess over the years, everybody, has been kind of turned bearish because the market's so overbought, and the funds keep buying and the cheap money keeps supporting it. So I like you said, it's just really kind of hard to fight. I would share some charts, except they're on my other computer, and we switched over to this computer because we had an echo on the other computer. So
sorry about that. Yeah,
that's okay. I'll have to. I only have certain programs on certain computers, so I'm aware of that echo problem on that computer. I haven't figured out how to fix it, but that's kind of my general thing. One of the things one of my big concerns over this year, I think there'll be a big newsmaker, is China. I mean, you can kind of see things heating up with the Chinese trade wars and Trump's choice of his liaisons with China. And if China starts sneezing, you remember years back, the market just really kind of has a problem. So when I look at my long-term cycles for China, the next 2 years for China are particularly difficult, and we're kind of looking for Chinese shorts at some point. But China's kind of in a big transition this year, and I think they're really kind of going to be in trouble and affect the world markets quite a bit.
Are you looking at specific indices in China, or?
I am, and there's like 3 or 4 of them, and for some reason I'm kind of like drawing a blank. We're trying to remember the one that I'm looking at, and we're starting to kind of put long Russia and short China into our ETF portfolio, and I'm just trying to find out the funds that have the best correlation with the indices. And as you know, that's always a total mess. And we're completing our research, so we haven't actually decided on the indices that we're going to use to correlate with the funds best. And so that's why I think I've got too many funds in my mind.
Yeah, that I've been watching that RSX, which I just pulled up, and I had it on as a ancillary setup about a week ago or so, and it's so far it's rallied nicely out of a pullback. And I saw something on Facebook over the weekend, and of course I had a couple of beers, and I just had to have it. It was Saturday night. I was checking my emails, checking the Facebook, and somebody had a "Make America Great Again" cap on, but it was printed in Russian. So I immediately went to eBay and I bought one. So maybe if Cosmeter has me back in about a week or so, I'll put it on. Surely, obviously a joke, but I do think it's interesting that Russia is doing so well, and it seems to correspond with this election here. So I find that interesting.
Yeah, the long-term cycles for Russia have always been good, and and actually the European cycles are just horrible this year. And it's you don't have to be a brain scientist to just see what's going on in Europe, and how all these you can have a whole domino thing. So to me, the big issue this year is going to be how much spillover from Europe and China will kind of force the U.S. market down, but I don't think it'll happen right away.
Okay, cool. Yeah, it's like we're all anti-China, but we sure don't want them to do bad, right? It's like people don't think about what could happen with the outcome of that. That's crazy.
Well, prices in Wall up 35% in one day. I mean, that's the end Target and anywhere else you shop. So, and of course, the people least able to afford that are all in Rust Belt states. So, my 4-year call on the market is 3 up 10% years and then a 25% correction with no net gain in the index during the first Trump administration. That is actually better than the Bush administration, which saw no net gain and then a 50% fall on the way out.
Yeah, I mean, it always seems like the timing is horrible with the Republicans versus the Democrats. But yeah, people ask me a lot of times that are obviously in the markets, who to vote for or whatever, and I'll say it doesn't matter. But if you must know, markets tend to do better under Democrats than Republicans, which is just the opposite.
Yeah, every crash in my lifetime has been under a Republican president, starting with the collapse of the Nifty 50 in the early 70s.
Gotcha.
I think it's good when the houses are split too. What they call that gridlock.
I think gridlock seems to be good for markets because nobody gets too excited about one thing or the other.
Yeah.
No, there's no radical change in a gridlock, and we do not have gridlock now. So expect radical change.
All right. Well, as far as direction this week, I think picking the direction of the market over a week is difficult at best. I'm slotted as a swing trader, and my feeling is that you can only predict the short term when it comes to markets, but you can ride out a trend forever. So you can only see so far out, but you can stick with the trend for years if it obviously develops. But a couple of my clients asked me, does that mean you could always predict the markets? And the answer to that is no. If you do have a setup, like about a week ago, I thought the S&P 500 had a nice little knockout move, little fake out type of move. Everything I do with technical analysis has a psychological backing. So people got excited because it looked like the market was breaking down a little bit. And as I borrowed from Linda Rasky, and I'm not sure where she got it when I asked her. She wasn't sure where she got it either. But a market will often do the most obvious in an unobvious manner. So it's obvious that we've been in an uptrend, but of course it's going to have a little shakeout before it takes off again. So far, so good there. And here's the main thing to look at is a trend follower. And as I often say, as I mentioned earlier, I got called a trend following moron once because I just follow along. And that's what you have to do. Notice that we made brand new highs on Friday, okay? And now we're giving up a little bit. So I agree with Neil in that we lost a little steam in this market. And you can see that net we haven't changed in, a few weeks. But I wouldn't rush out and sell the form just yet, and that's what stops so far. We have one long position. We have multiple long positions, but we have one long position that we've been in since February, and many times since February it looked like it was going to roll over and tank. But so far, through a trailing stop, we've been able to just ride it out longer term. There's always a reason to exit a market, and rarely. But I think the best thing you could do is just ride out that stop. So just real quick, and I don't want to take too much time. But if you take a look at the NASDAQ also looking okay too. You can see we made brand new highs again on Friday. And then if we close right around this level or higher, we'll be at all-time highs too. As a trend follower, I'm not going to argue with all-time highs. I hear Neil by saying that, hey, it's getting a little frothy in here. We could be in a little trouble. But so far, I'm not going to argue with those new highs. Now, the only thing that does have me a little concerned is this Russell 2000. And I tend to trade more volatile stocks. I go where the action is, and usually that's in the more volatile stocks. And early this year was in the energies and all, but those were pretty volatile too. Long story endless, so a little concerned that this Russell's probing the bottom of its range. But as you can see from this November lows, it's had a pretty good run in here, and it could use a little time to digest its gains. So what I'm kind of hoping, and Neil, thanks for bringing that up. That was pretty fascinating because I don't do a lot of that type of analysis. But what I'm hoping will happen is that moving average will begin to catch up with the drop-off effect. Let me just throw a 50 in there. So simple 50. And I'm hoping that maybe we'll start adding in some higher numbers, and then at 50 you'll start catching up with the market, so that frothiness will come off just by just through this consolidation. But we'll just have to wait and see. As a trend follow, I'm not going to try to outsmart it. I have a stop in place, and I'm just going to continue to follow along. All right, Lance, you're going to be up next, and let's see where we are now. I think we're on the question of the week. Oh, okay. The question of the week is, what are your primary trading goals for 2017, and how are you planning on reaching those goals?
Oh, this is I like this question a lot. So my goal is actually in 2017 is to dumb down my trading. I like your nickname, or your ex-nickname, the trend following moron. Basically, trade as simple and as basic as possible. I think a lot of times, especially if you're following the markets all day, every day, you tend to outthink yourself, or you take profits too early, hold on to losses, and just try to think, hey, like I'm a pro at this, I know all about the markets. Well, my whole goal for 2017 is just to trade as basically as dumbed down as possible. Stuff is going up, buy it, hold on until stuff is going down. Stuff's going down, sell it and hold on. So, people ask me questions all day about, hey, is this a buy here? Is this a buy here? Or are we in a long pattern? And I just say, what have we done the past week or so? What's the big money doing? What is the institutional players doing? I look at institutional order flow all day. I hardly see any puts being bought now on stocks or indexes, and the ones that are mostly hedges. I see long call buying, puts being sold, very bullish order flow all day. And just basically stick with the institutional order flow and your basic technical analysis. That's it.
Yeah, no, amen. I mean, that's one of the problems that Cosmin has reported back to us, is that one of the complaints is we don't have enough controversy on this show, although we do have John on, so maybe we could stir the pot a little bit. But I'm kidding. I'm half kidding. But yeah, God, that was well said, amen. And it's amazing the simpler it becomes. And I never said easy, because, I dropped plenty of F-bombs, and I did a webinar last week, and I told everybody, it's like, look, you see me all calm in this webinar and in my trading service, I'm saying, hey guys, it's okay, blah, blah, blah. But I'm dropping F-bombs over here. I'm human, and it's just perfectly normal to have a pulse, and you can't trade without emotions anyway. So as a human being, but that's another story altogether. Neil, let's go to you before I tell you guys not to ramble, and I don't want to be guilty. Too late, huh? Neil, we were having fun with this right before the show aired. We probably should have made that live, but Neil was saying some interesting thing about some of the comments, but maybe you can flesh that out a little bit. So Neil, what are your primary trading goals for 2017, and how are you planning on reaching those goals?
I was thinking about it when you were asking the question about 5 minutes ago, and I thought, you can have a goal in a football game, a basketball game, a soccer game, whatever it is, but in trading, I think to myself, do you have any goals when you go fishing? Do you think to yourself, all right, guys, today, 10 fish, that's just the way it is. We got to make this happen.
Yeah.
You don't. It's got to come to you, right? So every month, every year is going to be different opportunity in the market. Some years are amazing. You could make 100%. The next year, you're up 10% and you are a champion, So I would say my goals are to make sure I'm getting in at the proper moments, make sure I'm getting the right targets, more like a systematic approach, money management approach. Those types
more intuition and less intuition.
Sorry?
More intuition and less intuition. That's a line I steal all the time from Market Wizards.
More intuition, and what's the next one?
Less into wishing.
Okay.
So into wishy. Okay, I get it.
Oh, I got you.
That's straight from Market Wizards. No, good answer on that. Anything else? I don't want to cut you off.
I guess I would say sector rotation is going to be a big one. You got to make sure you get in for the sector rotation because that's going to be
amen. And that's a huge one. I'm glad you brought that up. That's something that you're really going to have to be in tune with because I think it's going to be
this year.
It seems like lately it's like a sector takes off and then it's like now what and then something else takes off. I think you're really going to have to pay attention. So I'm glad you brought that one up. Good job on that.
Yeah, because you got the big ones. Gold used to go for years, oil for years, and now it's a couple months. Oil rallies 2 months, you're out. Next one going to be. Yeah. So I guess that's what it's going to be. It gets faster and faster.
Yeah, and you can't fall in love. And early in my career, I was very guilty with that. I'd fall in love with gold. I'd fall in love with biotech or whatever, or energies, anything. You can't fall in love with them, and you can't fight the last war. I was at a presentation once, and they were giving out all these awards, these Morningstar awards, to all these people. It was over in Italy, and all these oil guys made all this money because oil doubled over 1 year, and that's the year it was going to go to 200. I'm like, you're not going to see one of these guys up here next year, and it's true. It's nothing, not to take anything away from them, but they were in the right place at the right time. They got their award, and they probably haven't saw an award in a long, long time. Barry, let's go over to you.
So one of my goals this year is to kind of stay out of the mainstream news, which has, obviously been a huge eyesore this year, and it's so easy to kind of get caught in the hype. And the idea is then to find really good inside stories that kind of keep you ahead of the curve. And so I'm always kind of looking for those, and I do my own research on cycles. So like I said, I really think Europe is a mess this year. I think Russia is going to do well. I think China is a mess this year, and I think you just have to kind of, and then when will the money flee into the U.S. if people go out of China and Europe, and that has been the case. So that's, I think part of my goal is just to kind of like find the really good inside story. I do my own research on that also, and go with it, and then try to stick with trending and try to stick with my cyclical timing window. So if early April is an important timing window, late May is always an important time window on stocks. And so stocks are holding up again until late May and early June. You just have to take profits. The statistics are with you. A lot of the cycles this year seem to go through big changes in September. Late August and big September is a huge kind of cyclical time period. So I'm in the midst of kind of charting out all my material over the next few weeks, but I've got to kind of stick with my major time windows and not get swayed by the little fear that the media throws at you every hour.
Yeah, sounds like you can stay in your lane and do what you do. That's good advice too. All right, John Thomas, other than wear your Make America Great hat as much as possible, what other goals or what other primary goals, trading goals, what trading goals do you have for 2017, and how are you planning on reaching those goals?
We're targeting a 50% return this year for our trading book. Don't overtrade. The problem we get into is we do 10 or 20 trades in a row that are profitable. And customers start screaming, they want more. They want more money-making trades. And then you reach for that 21st trade, and you absolutely get your hand chopped off. You just do something idiotic, like buy volatility when it's only at 11, which I did a month ago, and got stopped out of very quickly. So that is one thing. And the other thing is, keep your focus short. We're only doing front month options right now. Don't go out 3 or 6 months. The world could change 3 times between now and 6 months from now. You could have 6 black swans come land in 6 months.
Yeah,
and that's
amen.
The fact of, we're trading in the 7th year of a bull market, and risk is higher. Surprises have bigger impacts. The only way to deal with that is to keep positions small, short dated, keep your risk limited and defined, and honor your stop losses like the new religion.
Amen.
Second you offer your stop loss, that's when it costs you 5% or 10%. So
Absolutely.
those are the trading rules for now. Not only reflecting, the volatility of the future, which is also greatly increased, but the fact that we're in a very late stage of bull market now.
Yeah, no, I agree. And I was going to agree with you on that. Don't try to look too far out. After I show the obligatory big disclaimer screens that everybody uses, I think there's one copy out there. Everybody's copied it out there. Just change your company name. I always say all predictions are about the future. A lot of stuff can happen between now and then. I got that from Greg Morris, another one of those little tidbits. What I'm going to do, and to answer that question, is I know it's a little bit overdone, but I did one of these 17 trading resolution type of columns for 2017. So if you go to the homepage of my website, if it's a little bit later, if you're watching the show a few weeks from now, just hit more commentary and it's out there. And I've got a lot of common sense stuff, but you'd be surprised. Common sense is not that common. And so I'm not going to read you all these. Obviously, there's not enough time. But I say things like just trade when conditions are conducive to your methodology. I think both John and everybody here today is basically saying I'm going to stay in my lane. I'm going to do what I do well, and I'm going to do that. And then I'm going to make sure I plan a trade and follow the plan. So I'd encourage you to read this. And if you have to have one resolution, I would say on the next trade and just that one trade, do all of these 17 things. And then, of course, and I know it's cliche, but plan that trade and then follow that plan. If you don't have a plan to begin with, you're doomed. But if you can't have a plan and follow the trade on one trade, and I'm not a tough love kind of guy, but maybe I need to be more of a tough love kind of guy. But if you can't follow the plan on one trade, then maybe you shouldn't be trading. So I would make that, if you're newer to trading or if you're struggling quite a bit, pick the best, leave the rest, all these other little cliches and these things. I got quite a few of them in the column. But just follow your plan for one trade. And once you do that, and once you prove you can do that, regardless of the outcome, because I don't know who said it, but somebody once said outcomes are noisy. But regardless of the outcome, win, lose, or draw, pat yourself on the back and then do it on the next 1,000 trades. And then, my work is done. I'm going to drop the mic and walk out, But if you could just do that, follow your plan for one trade and then rinse and repeat. Okay. All right, Lance, let's go back to you. Do you have any, we added a feature a while back. Do you have any trades that you'd like to recommend, or a trade, I should say? And if not, a little tidbit or something would be great.
Yeah, so, I try to take trading one day at a time, especially going into the new year. Like I came in the new year flat. Last week I had really only a couple day trades just because, seeing what happens in the beginning of the year, the market. We talked about sector rotation briefly earlier. I think that's very important too, especially what we saw in retail. We're starting to see some rotation into like China names, which I'm not, if you say, Lance, are you bull or bear in China? I've been bearish on China probably for the last couple of years. And for the first time, I started to see, institutional order flow in Baidu going out to February, Baba going out to January and February. And then today, we saw about 7,000 of Impel, casino name, call options today. I mean, actually pull up the order. Impel, we saw about 7,000 of the Feb 17 calls and the Feb 24th expiration 16.5 calls today. So I actually bought
what's the symbol on that?
Impel, that's M-P-E-L.
Oh, Impel. Okay, yeah, I know it.
And I believe we received an upgrade this morning from one of these firms too. So I actually bought some common stock. The options are a little wide. But speaking of kind of casino names in China, I mean, every time these institutions buy calls, whether it be MGM, Vegas, I would say about 4 out of 5 times they've been spot on the activity. So I actually bought some Impel common stock today. And then I'm not a huge fan of like small names, especially low volume names, but I wanted to do something to participate in the JP Morgan Healthcare Conference. So I bought some common stock in ITCI. They are presenting Thursday at the JP Morgan Health Conference. That's intracellular therapies. And the last time they reported on a conference was December 1st. And that day and the following day, the stock jumped nearly 20%. And we saw some institutional order flow in the February 17.5 calls. So I'm just sticking, very basic. I mean, I'm not even trading the options because some of the options can be a little wide. Just going, buying some common stock, riding these events. As far as like index futures, I mean, I really can't say too much. They've been very choppy, looking at the market eternals and such. So sticking with some names, Impel and ITCI.
Gotcha. Okay. Neil, let's go over to you. Do you have a trade of the week? If not, a little or something would be great. All right, Neil. I guess Neil went to the bathroom.
Nope, sorry, I just was away for a quick second. What was it, Dave?
Hey, do you have a trade of the week, or if not, any little gem or advice you'd like to throw out if you don't have one queued up?
The big money was already made so easily a few weeks ago. It's very, very tough right now. So if you're addicted to trading, just be careful this week.
Yeah.
Yeah. I don't have one for the week that I could say for sure this is my big one. I mean, a few weeks ago I did. We had some big ones, but this week you got to be real careful.
Yeah, and John touched upon that too a minute ago. Just don't overtrade. I mean, if you have a setup and I call it the can't stand it test. If you can't stand it, you feel like you have to take it. You couldn't live with yourself. If you didn't, then take it. But don't. A friend of mine once said he hired me for a project, and he just told me don't invent trades. It was Peter Mothy that said that, and I love that statement. Just don't invent trades, and that probably needs to be a resolution for 2017. Again, it's cliche, pick the best, leave the rest, but don't invent trades. Make sure you really, really like to trade before you put capital into harm's way. And I think that's
I tell my readers, there's no law that says you have to trade every day of the year. Exactly. You're trying to buy your own yacht, not your broker's yacht.
Yeah. Good advice, John. I was in a webinar a few weeks back, and one lady was talking about she had a Forex service, and she was, she gave a little spiel on that. And I found it kind of interesting. And then immediately, like 10 questions. Well, how many trades? How many trades? How many trades do you recommend? It's like people obviously are craving action. And as I often say, if you want action, have an affair. That way you only lose half of your money, So
yeah, we only trade at sweet spots, and sweet spots don't happen in the market every day.
That's right.
We sometimes we'll do 10 trades a day. Sometimes we'll do no trades in 3 weeks, and we warn all our followers that's what's going to happen.
Yeah. And sometimes hopefully I'll bore you to death, but we make money, and that's fine with me. John, while we have you, do you have any a trade of the week, or do you want to, or you have a little tidbit you want to throw out?
Yeah, I think Apple's going to continue its run here. We bought it on Friday on a 1-week view, and it's taken off. And if you can't buy Apple, you'll do just as well with Amazon, Facebook. Any of the big tech stocks really got beaten up after the election. They're the only major sector that's a value play left in this market. And given the choice of buying a financial that's gone up 25 or 50%, and a tech that's just crawling off a bottom, the tech is a no-brainer here. So we actually loaded the boat with tech, including Amazon, last week.
Gotcha. Okay, Barry, do you have a trade of the week? And if not, any little tip you want to throw out for us?
We're, I think we're also in kind of a choppy consolidation period. We like the dollar long term, and we like the short euro long term. So we've been looking at 185 on the March dollar index, maximum maybe 110 on the March dollar index, and we got down to those levels. This is fairly small risk. You can, on ETFs, you can buy UUP. If you want to be short the euro, you can go into EUO. And we're looking at the 107 level, 107.30 level on euro futures, and maybe 107 on cash. This is just a lot of good risk reward there. I mean, Europe's in big trouble this year. They're not going to get any good news. And this rally that we had last week was a big gift. And we're going to be looking at 95 at some point on the euro, and
Wow.
And 130 on the yen.
yeah, 129 on the yen. I've been looking at that too. Yeah, the short YCS for being short the yen against the dollar is something that we're looking at. But the setups aren't nearly perfect yet. But I think if we, the problem with the dollar was it got close enough to being done last on Friday, and it rallied a little bit too much. And I'm just hoping that we somehow get one more push down or some type of secondary low, because I think that's an important play for the next 3 or 4 months.
Okay, cool.
Yeah, I'm totally with him on the dollar.
Okay, so you guys are bearish on the dollar? I was
Bullish.
pulling up charts as y'all were talking.
We're friendly on the dollar, bearish on the euro. Yeah.
Okay, gotcha. I'm glad John mentioned Russia, because that's one that we've been watching quite a bit. I'm not a huge fan of trading ETFs because I think you need to look for inefficiencies in markets if you're going to beat the overall market, if your benchmark is the S&P 500. But I like to try to make as much money as possible and not worry about a benchmark, and that's why I'm not so excited about ETFs. But if I had to throw something out ETF-wise, this Russian ETFs looks pretty good in here still. It looked a lot better when it was set up as a pullback. So if you did go long that, make sure you have a stop in place. We're long. This is the actual portfolio we're long right now. We're long Havanerian. It looks a little frothy here, but we had a nice little correction. So maybe if it got above, let's say 280 or so, that'd be a trigger. But if it doesn't trigger within a few days, I think I would pass on that. So as far as the trade of the week, take a look at this Havanerian, symbol HOV. It looks okay. And again, I know it's a little frothy, but it's a type of setup I like to trade after you have a nice run and a knockout type of move. We got in back here after this little knockout bar here, but it does look like it has a pullback in here, and it does look like it has potential to take off again. So that's the trade of the week. And as far as advice, I would just say it's self-serving, but read my column. But I'm not saying anything that I think that anyone else isn't saying. That as far as follow your plan, use stops, wait for entries, and all these other good things in 2017. And as I think everyone here said today, don't overtrade. Make sure you have something that's worthwhile before putting. Okay, let's just do a quick wrap up here. We'll go Lance first. Any closing thoughts you want to tell us about markets, yourself, AlphaShark, trading.com, or anything like that? Floor is yours, Lance.
Well, going back to the whole overtrading, actually, I'm a huge fan of podcasts just in general, especially personal coaching, life coaching, just entrepreneurship, better, to become a better person in general. And I was listening to one the other week for starting off the year, and it was called The Honest Audit. And this guy had, every week, it could be Friday or Monday, he would sit down with his team and say, hey, what went right this week? What went wrong? And what can I improve on for the next week? So I started to take that into my trading. What trades went right, what went wrong, and why did they go wrong? What to improve on. And I kind of made some notes. I have on a whiteboard here, and actually on a piece of paper I just found on my desk. To be accountable for all trades. For day trades, if that's your thing, instead of doing 3 to 5 trades a day, maybe 3 to 5 trades a week. If you're a futures trader, sometimes there's not opportunities.
Yeah.
And then for swing trades, I always found what built my best years were trying to find, it could be 2 to 3 big trades a year where everything just clicked. Like if you looked at the Fed meeting in December, what was the big move there? It was long the dollar, shorting gold. And I actually bought some UUP calls ahead of that. That worked out fantastic. And just that trade alone could have made the whole year of trading. All the other days could just be research or just smaller positions, or to get a feel for the market. So that's kind of my whole thing for the year, and what I've been trying to practice and teach everyone at AlphaShark, from the options room to the futures room. Anyone can email me, Lance at AlphaShark, and we do have an open house if you trade futures at AlphaShark this week. So if you're interested, feel free to shoot me an email, Lance at AlphaShark.com.
Cool. Yeah, +1 on that being more selective thing. I spoke to a group of day traders a few months back in Vegas, And some of these guys who were making thousands of trades, one guy claimed he made over 500,000 trades, and I don't doubt him in his life. But one thing I was telling him, we're only wired to make so many decisions, and with each decision comes stress, and that's just a fact of life, and that's from a physiological level. There's nothing we can do about that. It's how we're made. And what I was trying to encourage him to do, nobody in the room was over 30 years old. I was the old fart there, and I was trying to tell him, look, this is great. You're making money. Don't let me F you up. Keep making money. But if you're making 100 trades a day, take a look at those 100 trades, see which ones were really paid off, and maybe focus on those and see if you can make fewer trades but better trades and focus. So I'm glad you brought that up, and I think
I tell people to use the 80-20 rule.
Absolutely. Pareto comes up all the time in everything. It's amazing how amazing that rule is, no matter what you do. Yeah, absolutely.
Yeah. 80% of your profits come from 20% of your trades. So dump the other 80%.
Amen.
And if you sit, if you're retired or you're in college or whatever, if you have nothing to do during the day and all you do is trade, or if there's nothing going on in the afternoon, find another hobby, read, go for a walk, go to lunch, something like that, because
I go hiking.
There's nothing going on. Just save your money and then look forward to the next day and become prepared. Wake up early, get prepared, get out, and work on all the aspects of life, or just do research for these larger events that are occurring in the future.
If I sit here and watch a screen all day, I'll be like the little rat hitting the button for the cocaine. I know myself,
Yeah.
So I do keep a loose eye on the screens because I am here, but I keep myself crazy busy, and I recommend that everyone do that. If you have the luxury of sitting in front of a screen all day, don't. Find something to keep you busy. Take your setups and then move on. And in a lot of cases, and I don't want to go too long, but a lot of cases, you can let the market make decisions for you. You could put a stop entry into place if you're a small trader, let yourself get triggered into a trade, and then maybe put a stop in and go about your life and let a stop take you out. Or at the least, just set alerts. And if you don't get an alert, don't do anything. If you get an alert, well, you have to take action to take action. So
don't reach for the trade that's not there.
Yeah, exactly. Once again, no controversy. Neil, any closing thoughts from you and anything else you want to tell us about TraderReview.com? Okay, while we're waiting on Neil, Barry, you have any closing thoughts?
No, just encourage you to kind of take a 2-week trial of our newsletters. You can go to ETFtimertoday.com or forecast.com or commoditytimers.com. We've got a number of portal sites. And we're kind of, I like a lot of things that you guys have been saying. We've kind of, I used to put out 20 updates a day, and I was trading all day, and it just gets too crazy, and there's so much more to life. And so we've tried to kind of simplify. We've got a big morning report. We got a big report for the evening to set up for the night session. And, if the markets are going crazy, we kind of put out something at 10 o'clock every day just to kind of, let you know what we're thinking and stuff like that. But, I'm thinking of trading really should be the kind of the royal route where you save your nervous system from stress. And so doing the long-term trades, the investor orientation, the 3-week trades is definitely the way to go for you new traders. Just we do have a day trading service also, but we do one S&P trade in the morning, and then we're done at 10 o'clock. It's just that way we don't have to watch it all day. So
yeah, I think I'm anti-day trading, but I think intraday position trading, where you put on one position a day, I think that's fine if that's what you want to do. Absolutely, that's a good point.
Yeah, so go for the royal route. Save the stress. This is kind of a stressful year. People are just really anxious and fearing for the new year and fearing Trump. And I think you just have to just trust that somehow God is taking care of us and the planet, and we're not going to blow each other up. If anything, because we have friends with Russia now, maybe we're in better shape. We have to worry about China, I think.
Yeah, no kidding. Hey, Neil, you might have walked off a second ago when I said it. Do you have any closing thoughts for us? All right, we're still waiting on Neil. John, how about you? You have any closing thoughts for us?
Drink the Kool-Aid. The market is discounting the benefits of new government policies now. It'll discount the costs later.
I got you.
And that may be in weeks, it may be in months, it may not be for a year or two. But when the market starts to look at the costs, watch out.
Well, you know, and it takes a big man to do that, John.
Every 5-point rally in bonds for the rest of your life.
Well, you know, it takes a big man to do that, John, because I know you're not happy with things, but it sounds like if the market's going higher, you're going to be long. You're not going to fight it because you're mad. You're just going to go long, right?
You trade the market you have, not the one you want. I actually make more money in crashes than I do in bull markets. So,
gotcha.
You know, this accelerates the next crash. So I'm fine with that. Everybody else, I'm not so sure about.
Gotcha.
But,
all right.
Yeah, the causes of the next recession are now in view. They weren't before. So they're now very clear. You know, inflation spike leads to interest rate spike, leads to stock market crash.
Right. Long lead and lag cycles and all that, but I hear you, and I can't argue with that, but I hear you. Neil, one more shot. Any I don't know if Neil lost his mic or what, but Neil, any closing thoughts? Okay, going once.
I have something to.
Okay, go ahead.
So I mean, I've been watching people predict stock market crashes since 2011, and you know, there's so much money tied up in pension funds, and it takes so long for an ocean liner to kind of turn around, you know. So I think you know, people have been kind of building their businesses, kind of trying to predict crashes, and I've just watched these people make fools of themselves. I think you just have to assume that, you know, yes, we have something big setting up in the 7th year of a bull market, and
yeah,
you know, but it still may even take another year. I mean, my feeling is that, you know, maybe we had S&P 2380 to 2400 this year, maybe correct 10% or something like that, and then make a divergent high next year, and then you have big things going on until 2019, 2020 with the cycle. So I think,
well, yeah, you know, eventually it ends badly, and I'm glad you brought that up. I mean, we're a little long in the tooth, but as long as it's going up, it's going up. You know, let's just follow along.
Most pension funds only reallocate once a year and have not even had a chance to react to the election result yet.
But that's a good thing, right?
Yeah, well, yeah, it is, because you know, it means selling more bonds and buying of stocks.
Okay.
It has yet to hit the market in a big way.
I'm
That's
all
what
in on
I
that.
think. 3 up years of 10% and then a down year of 25.
Cool. Well, let's see what
These
happens.
guys are so slow to react. You know, CalPERS is one of them, the California Pension Fund. They're the largest and the slowest moving of all. They're only just starting to fire their hedge funds.
Gotcha. Cool. Okay. Just to wrap things up, we're a little long, so let me just try to do this quickly. Dave Landry here, DaveLandry.com. Anything unanswered, DaveLandry.com. Get to know me first before you spend any money. I do a weekly webinar, so come to that. You can find the information on my homepage. I have a daily trading service, but get to know that too. Sign up for the delayed service, which you can find some information on my homepage. And if you can't find it, just shoot me an email at dave@davelandry.com. We don't take ourselves too seriously. We have a pretty good group showing up each week in these webinars, and they are free, by the way. So feel free to stop by, ask a few questions, and participate. And without you, obviously, there is no show. Anyway, I think that's it. I'll let Dave Kosmeter wrap things up. But once again, thank you, David. Obviously, thank all you guys, and I'll let David give you the final shout out here. But thanks again to Timing Research for having me back once again as host. And again, you guys, this was an awesome show, by the way. This is one, and I know I probably say this often, but this was probably one of the best shows we've had, certainly this year. So thank you guys so much. And David, back to you.
Thank you.
All right. Yeah. Thanks, guys. Great show. For everyone watching, just a reminder to hit the YouTube subscribe button if you haven't yet to make sure you get updates on future shows. We actually hit 400 YouTube subscribers during the show today.
Wow.
So, be sure to subscribe for those updates. Also, you can go to TimingResearch.com and download any of the past reports or watch any of the past shows there. And be sure to join us next week on January 17th. That'll be a Tuesday show. Fausto Puglisi, Simon Klein, Jason Jankowski, Stephanie Kammerman, and Dean Jenkins will be on that show. So just want to thank all my guests again for this week. Barry Rosen of FortuCast.com, Neil Batho of TraderReview.com, John Thomas of MadHedgeFundTrader.com, Lance Ippolito of AlphaShark.com, and Dave Landry of DaveLandry.com. Thanks, guys.
Thank you.